Welcome back. You're watching ET Inside. It's been a tough year for banks in India, with credit growth slowing on the one hand and bad loans rising on the other. As competition gets stiffer and margins come under pressure, banks are increasing the exposure to off-balance sheet transactions such as forward contracts. But that is a double-edged sword. Swati D'Souza explains.
It's a familiar tale. As the environment gets tough, banks look for alternative ways and means to boost profits. Enter off-balance sheet items that do not appear on a bank's balance sheet but reflect only in its profit and loss statements as other income. Typically, off-balance sheet items tend to grow in periods of high growth as banks are easily able to sell structured products. But the past year has been different.
So we are really looking at a situation where there was a 40% growth in 04 to 08. There was a significant degrowth in 08 to 010. And we are again seeing a growth of 10-11 of I think somewhere between 35 to 40% in the OBS.
According to the RBI, last year, off-balance sheet transactions by banks increased by nearly 31% to 1,38,000 crore rupees. Forward contracts accounted for 86.8% of that, followed by bank acceptances and bank guarantees. The reason why a rise in off-balance sheet items is dangerous is that these products have a notional derivative component and a bank's exposure can sometimes even exceed its entire net worth. Since these items are off the balance sheet, it's difficult for investors or even the regulator to assess the true risk associated with it.
As far as some of the corporates are concerned, in terms of the FCCB borrowing, in terms of the ECB borrowing, or their domestic borrowing in foreign currency, if they don't have the proper hedge due to the current movement of rupee versus dollar, there have been cases where their rupee liability will go up and their rupee outflow also will go up. So that extent we need to take care of providing them additional facilities.
Up till last year, foreign banks had the highest off-balance sheet exposures, followed by new private sector banks and public sector banks. But domestic banks, particularly large private and public sector players, are now aggressively growing their off-balance sheet items.
A certain amount of off-balance sheet exposure is necessary both for project funding as well as for normal trade operations. Off-balance sheet exposures have risen over the last couple of years also because of speculation, as we've seen with derivatives and certain other things.
While OBS activities have helped a struggling banking industry to maintain its profitability, the risk associated with such exposures have been difficult to quantify. And regulator RBI believes that in the case of a default, such exposures could cause a serious damage to the industry as a whole, especially foreign banks, which make up 6.8% of the total assets of the banking system but hold more than 2/3 of the total OBS in the last fiscal.
Foreign banks, though they do not have a very significant presence in terms of a systemic issue, but I think they are the most active players in the derivative market. One concern really that I think we need to look at going forward is there has been some activity, increased activity in the proprietary space as far as derivatives are concerned, and our sense is that some of those may well be unhedged. It's hard to get a sense as to what extent of the issue are we looking at, but certainly that's an area to watch out for.
So why are off-balance sheet exposures so attractive even when they're so risky? According to an analysis by RBI, a 1% increase in off-balance sheet exposures increases the other income of the banking sector by 0.08%. Other income as a proportion of net revenues for foreign banks and new private sector banks stood at 38% and 36% respectively in financial year 2011, while public sector banks had a relatively lower exposure to OBS items at 26%.
The amount of guarantees issued and LCs issued has gone up. And of course the forward covers, because the rupee was volatile, I think the amount of forward covers also would have gone up.
It's not like the rise in OBS activities is going unnoticed by regulator RBI. In 2008, the central bank strengthened the framework for OBS, which included additional risk weights and provisioning requirements for exposures to specific sectors. Bankers on their part are carefully evaluating customers and their risk profiles before getting into these transactions. But that's not to say the system is foolproof. The risky nature of off-balance sheet items came to light during the 2008 global economic crisis. At that time, Indian banks were relatively better off than banks across the world. But that may not be the case now because the banking sector is now looking much weaker with higher NPAs. And so they need to give the matter a serious look this time around.
Indeed, so how can India resurrect its banking sector and what are the challenges ahead? That's coming up in just a bit. Stay with us.